The Fed just came out and they're keeping rates the same. Inflation this morning, we saw our last video, decreased slightly to 3.4% from 3.5%. And Powell has come out and said that he hasn't seen material gains in inflation to really pump the brakes and start cutting rates. Guys, this is your host, Roaring Kitty. Just kidding. I did not get the chuckle I was hoping for. How is GameStop? The reason I bring this up is we were looking at the CME, but somebody in the studio said, is that the GME? What's it called, Mo? What does the CME say about the chances for the next few meetings being staying the same, cuts, increases? Take it away, my friend.
Okay, next meeting is July 31st, obviously 2024. 91.1% chance it stays the same. 8.8% chance it moves. Which is interesting because
this morning it was 15%.
And if I just come over to this side of the screen, the dot plot is actually showing that the consensus is that the presidents are going to bring rates down. Kind of
That's
weird.
Interesting.
Okay, let's go to September. September, 58.2% chance that we are going to fall 25 basis points.
So guys, what's the reason why we'd fall? I'm a broken record here, but you got to remember the reason I like repeating things over and over is everyone tries to get all these nuances and little details. No, this one affects, guys, all I care about is why would you cut rates? Just keep it very simple. Why would you cut rates? You need to spur the economy. Why would you spur the economy? Unemployment's up. There's some sort of slowdown in the economy. That's why you do it. Not just because, well, we raised rates. Because remember, right now, rates are where they have been essentially historically. If you look at history, the 150-year history, basically, of the 10-year treasury, Mo, what's the 10-year treasury at right now? I think the average is 4.4%, give or take. What's it at right now?
4.3%.
All right, versus 4.3%. Now, why does it feel like rates are so high? Well, the last 15 years, where have rates been?
Basically.
Last 20 years. I remember getting a mortgage in 2003 for my first house I bought at 5%. And thinking to myself, like, yeah, I'm never going to see that again. The last house, my fiance owns a house and she got 2.625 back in 2020 or 2021 or whatever it was. Yeah. So this is the reason why we feel like interest rates are so high is because our recency bias. Where have rates been recently? Yeah. They've been so incredibly low that we just think, oh, this is just this aberration here of 7%, 8% interest rates. Guys, these are about normal. And I know that our average viewer is 25 to 45 years old. So our average viewer is my age on the high end. And so they've only experienced low rates and declining rates in their life, in their essentially lifetime, as well as in their career. So this is what really affects people. Now, on any given day, any given month, who cares where interest rates are? You might sit there and say, Paul, that's a dangerous way of thinking. Or is it a better way of thinking because good businesses at good prices are what you should try to achieve? And good managers don't need low interest rates in order to succeed. You know, we do real estate deals. It's odd to me that as rates go up, we have less competition. I sit there and go, wait a second. Why? I love higher rates. I was just talking, I'm not going to mention who it was, but we're working on talking to a Fed president on our channel, one of the big Fed presidents. And I was talking to one of their right-hand people. And I said, yeah, I love high interest rates. And she laughed. And I said, no, I'm serious. It's way better for me. It's way better for business because good business owners and good investors like high interest rates. And she kind of went like, yeah, I think I'd agree with you on that one. And I was like, okay, good. I'm glad to hear that. If you need perfect environment to make money, you're not an investor. You're not a business person. You're just riding a coattail. That's it. When I hear people say, it's no different than me when I hear somebody say, I'm going to this city because there's so many more jobs there. You can't create opportunity for yourself in whatever city you go to. Now, I might sound like, oh, Paul, come on. There's a difference between you just lost your job, there's hardship, and you get to another city to get a job. But I look at interest rates as the same thing. If you only do well because rates are low, what are you doing? You look at the S&P 500 over the last 2 years and change. It's barely outpaced the 90-day treasury in returns. Yeah. Barely, Mo. Is that enough return for valuations this high?
Yeah, 5.38% is the 90-day.
5.38%. So for those of you who are sitting on cash, 2 years ago, you're getting 0%. At some point, you're getting negative percent. Now you're getting 5.38%. That's going to change the framework in which you look at other investments. Because you're going to sit there and say, well, I can invest in 90-day treasury at 5.4% risk-free. I wouldn't go do this for 7%.
I wouldn't go to a stock for 7% where you have to deal with the volatility, and et cetera.
Absolutely. And that's the way your thinking should be. So if you're not thinking that way yet, that's okay. You found this channel, and we're trying to teach that way of thinking. Because guess what? 20 years ago, I didn't think that way. I thought, oh, this is cool. It's an 8% return. Well, yeah, but what's your opportunity cost? What else can I get out there? And right now, that opportunity cost is 5.4%. And if the Fed lowers rates, where will that opportunity cost go? It'll go down. If Fed raises rates, where will that opportunity cost go? It'll go up. Good news is now you can give the money to the government at 5.4% and beat the current inflation rate of 3.4%.
Yeah.
Now, we were just having a conversation in the studio with Dalton about how the Fed is very reactive. Absolutely. They're very reactive. Right, Dalton? Very reactive. I'm okay with that. I don't want them meddling their hands all the time. I want less. Less is more. But if inflation goes up like it did before, remember, guys, our peak recently was 9% inflation. Inflation started to go like this. They started raising rates. It started to go like this. There's no coincidence there. Why? When you raise rates, you increase the cost of borrowing. So it's harder for people to expand, harder for people to buy more goods, like expensive goods, and jobs to expand, et cetera. So what happens then? There's a way down on costs for things. That's how this all works. So let's go to extreme. Let's say we made interest rates 100% tomorrow. There'd be a standstill in the U.S. economy, and it would attract so far. And I did the other extreme. Let's say interest rates became negative 10%. You might wonder to yourself, what the heck is negative 10%? You give the government $10,000, and a year later, they give you back $9,000. That's negative interest, right? Because if you give you 10%, they're going to give you $11,000. Negative 10 means they're going to keep $10,000. You might sit there and say, why would that ever happen? Well,
It happened for a day.
It's happened for short periods of time, but the reason it would happen is you don't have faith in anything else out there. And you'd rather give the government money and say, give me back less, because at least it's safer than investing in blah, 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 whatever that may be. Those are the reasons why we have negative interest rates. But guys, I have no idea where they're going to be this year. Nobody has a clue. Anybody who says otherwise, you should run away from, because there's a big YouTuber we met with 2 years ago, and he was calling for, the Fed's going to lower rates in the first quarter of 2023. And they just kept raising and raising and raising. Listen, I've made bad calls too, but I did the bad calls with my money, and I didn't tell anybody else to do that. When you sit there and sound so profound about that, give me a break. Nobody has a clue where rates are going to go. Mo, where do you think rates are going to be this year? Let's have some fun, though.
I was actually going to ask you this question.
Let's have some fun.
I have the CME group here, and I want to ask you, this time next year, so June next year, okay, where do you think the consensus is from the market that rates are? Highest percentage right now.
So I'm going to go to my...
Oh, you're going to do a poll?
No, I already did a poll. Remember, okay. I did a poll yesterday on my Twitter?
Yeah.
That's not the one. Different one. Here's my poll that I did June 11th. And guys, follow me on Twitter if you want to have some fun. EM Paul G on Twitter, and then follow Everything Money. It's on my accounts. Where do you think, how many rate cuts do you think we'll have in the next 18 months?
Okay.
In the next 18 months. The vast majority, 44%, said 1 to 2. I actually was surprised by that. For 18 months.
Would say more.
And that's exactly. And that's why I'm wondering if people read the full thing. Because they always saw December 31st and didn't read the next line. I actually thought it would be higher. Guess what? Mo, what's your number? I have a number here. I have a number here in my hand. I'm not going to show it to you.
3.
Oh, I was playing 4. I have no reason to believe that, other than the public pressure being placed on the Fed and any excuse they have.
With that, though, they've had a lot of public pressure for the last...
Yeah, but they've also had high inflation. I think if inflation really starts
if
to...
it stays where it's at or continues to trickle.
And they're going to sit there... I was surprised today when he said, we're not seeing as many gains on inflation as everybody thinks we are. I mean, 3.4 versus 3.5. Now, again, I'm not saying this as a way of saying I'm not going to change at all how I invest based on that. All I'm going to do is sit there and enjoy the ride and watch Powell get blasted on TV and have everybody hate Powell for this. All I know is if we have 4 or 5 interest rates cuts in the next 18 months, the economy's probably slowed significantly, which isn't a bad thing. It's a bad thing if you lost your job. But every time we have a recession, we come out of it better. And every person 10 years down the road, basically, when I say every person, you know what I mean, the vast majority end up with better lives. I was looking at the data today. Guys, in 1947, the average income in the country per capita was like $1,600. It is now $83,000. That's per capita income. Per capita income. Look at that growth. That doesn't include inflation being counted for in there. I think with inflation, it was like 60,000 or something. So we've still seen real growth here. The country will do better. The country absolutely will do better. Mo?
So I don't have their prediction doesn't go out to December, but it goes out to September of 2025, end of September, and it does have 4 rate cuts in there.
Does it really?
Yeah. That's where the majority are sitting.
And guys, back to the Korean War. Here's the S&P going back to the Korean War. Here are all the bad things that happen. If you dollar cost average, you're going to do well over long periods of time, over very long periods of time. I just sit there and say valuations drive long-term gains. Don't be afraid, because all the times when valuations were the best were here. When was that? Whenever it was scared to death, and then death. And at times when valuations were the worst were when everybody was euphoric and saying things are easy. And of course we want to mask it. There's always a story behind that. When things are bad, the story is the world's falling apart. And no matter what you try to say, hey, but look at history. This is different. It's just like every election. Every election without fail is the most important election of our lifetime. Spoiler alert, none of them are important. None of them are important. Every election since I remember is the most important election of our lifetime. Just like every time things are good, Paul, it's different this time. Every time things are bad, Paul, it's different this time. It's not going to get better. Okay, sounds good. So do you want to fall for that fear-mongering and for that euphoria and chase the crowds? You can do that. But something's going to happen. You're going to make a lot less money. Or you can sit there and, yes, it's tough to be an investor. Why? Because a true investor, through thick and thin, stays the course. That's what I'm trying to teach. So guys, if you like this, if you like what I've said, and you want to see 4 or 5 videos a week reacting to the markets and the news and quarterly results from companies, please do me a favor. Subscribe to the channel. Thank you very much for your time.